Ladies and gentlemen, welcome to Insurance Town. I'm the Mayor, Heath Sheeran, and the host of this podcast. I am so pumped you're here hanging out with me today because I got my friend Dylan Dimarchi hanging out. You're going to love this conversation. I can't do this show without my sponsors in Smart Choice, Canopy Connect, and my new sponsor in MAV. Canopy Connect is your one-click solution to getting deck pages, intake forms, everything that you need from loss runs to driver's list to vehicles, you name it, they can help you get all of those things with one click. Go to usecanopy.com/Heath. Get a demo, get a discount for being a citizen. You got to check it out. I don't know what you're doing if you haven't started working with them. Also, my good friends over at Smart Choice. They are the fastest growing agency network, hands down, with 11,000 agencies, $11 billion in written premium, no fees, higher commissions, lower premium thresholds. Why wouldn't you want to work with them? Make sure you go check it out, smartchoiceagents.com. They are a dream come true as far as a partner to work with because they don't want you to bring all of your carrier contracts underneath their umbrella or try to take commission from existing business. No, they just bring you what you need to be a better agency owner, to be a better fit for the. It's wonderful to have them as part of your team. Go check it out. Also, my new friends over at HireMav.com. Go check out Mav. You don't need a call center. Just use Mav. Mav is like the AI-powered insurance expert that engages unlimited leads with friendly text to qualify, quote, and connect prospects to agents. You hate running a call center and your leads hate getting those calls. They're spammy, they're gross, they're icky. Swap out your entire call center for one capable AI insurance ready agent to deliver real results. Think about this. Call centers rely on outdated pre-caller ID tactics. Mav has text conversations that are personal, relevant, and accurate every single time. Mav manages it all. Mav is trained on industry-vetted playbooks that you can even upload your own training manual to make sure your business is accurately represented. I could go on and on and on, but guys, go check out HireMav.com. I'm getting out of the way so you can check out this conversation with Dylan Dimarchi. Dylan Dimarchi, what's going on, brother?
Heath, good to see you, sir. Thank you for taking the time and having me on.
Yeah, brother. So, talk to me a minute, man. Dimarchi's Italian. You're from Hawaii. You've grown up with some really good food, man.
Yes, sir. We were definitely a pasta household growing up. Cannot complain. Yeah, my dad's Italian, and I think my grandpa was the one who came over way back when. So yeah, no complaints, and happy about the culinary setup. Hawaii is excellent, fresh fish and poke and all that, but now I and our whole team are based out of New York. So lots of culinary experiences all over the place.
So are you a food snob then? Growing up with Italian and Hawaiian heritage, and now being in New York, which is like incredible.
No, I'm not a snob. New York is too expensive to be a full-time food snob. I keep it
Yeah,
pretty simple. Otherwise, you run out of money pretty fast in New York if you're going to all the super fancy places.
yeah, dude, I get it. I get it. Tell me about here. All right. So that's good. Yeah, there we go, Dylan. Okay, so tell me a little bit about. So I've never been to Hawaii. It's on my bucket list for sure. But the whole like gross thing, burying it under the ground, doing the whole things. Did you guys do those things often? It's like a touristy thing.
Yeah, well, you definitely have to get out there.
Yeah,
It is the best place on earth, and it's a U.S. state, so it's
yeah,
extremely safe, extremely high quality of life, good infrastructure. But yeah, it's amazing. It's one of the best places to grow up. Surfing and lots of water sports. And people complain that it's expensive, but we're running our company out of New York, which seems crazy expensive. So Hawaii actually seems like a pretty good deal. So yeah, you better get out there. Maybe next holiday season, take the family.
yeah, dude, for sure. All right, so talk to me. Let's take a walk down memory lane a minute and tell me, Dylan, where how you got to where you are now. What kind of led you there? Your career path, kind of thing, of where you're at Eventual, how you got to where you're at.
Yeah, of course. So, your listeners tuning in right now may hear a little bit of an unusual story into insurance versus, I think, some of the prior guests you've had on the show. So, to the listeners listening right now, thank you for your patience. But yeah, I found my way to insurance kind of through real estate. I grew up really being a fan of architecture and buildings and thought they were just kind of cool for some reason. So yeah, after graduating college, I ended up on the real estate investing side at a company called Blackstone, which owns and invests in a lot of apartment buildings and warehouses. Thought that was an awesome job. Really did not think about insurance a lot until the last couple of years, call it like summer 2022. Suddenly, insurance, which kind of our risk advisors and consultants would kind of handle, insurance really started to become a focus area for us because we saw, across our portfolio and more importantly, across a lot of other larger real estate portfolios, the price of insurance just went crazy. Like it was, I don't know, a couple $100 per apartment per year in like 2020, and then you wake up and you're hearing other investors paying $1,000 per apartment per year, maybe $1,200. And so that was crazy. It's rare to see something change so dramatically over time. And I think most people think of insurance as like a pretty stable item in running, the cost of running their home or the cost of running a building. And that's no longer the case. So yeah, I somehow became our insurance nerd and insurance expert internally. And then finally got fed up enough with the problems that we were hearing about and facing to leave that nice stable job and take some risk starting a new company to try to solve some of those problems. And here we are today talking to you, Heath.
That is quite a different path here. So, what was it about the real estate and coming up in that area and managing some of those transactions? What was it there that showed you, hey, we've got a challenge here, and there's something that I think I can do moving forward, maybe to help solve that challenge?
Yeah, Heath, I think what I saw is probably really similar to what some of the other, what some of your listeners and probably some of your prior guests have mentioned, which is that in kind of the old days of insurance, it was pretty predictable what it would cost to insure a house in the US. It would grow with inflation, couple percentage points a year, pretty predictable, pretty stable. That was nice, that was reliable. But really coming out of COVID, when we saw inflation start to go crazy, the price of insurance just became really volatile and really unpredictable. And now, as your listeners will know, being in the insurance business is quite challenging. You're facing challenging retention rates as homeowners are mad at you when their insurance prices go up and they don't understand why the insurance prices are going up. It's hard to win new business. In some geographies, some states, it's actually hard to just get insurance because of mostly how insurance is regulated in those places. And so, if you're an insurance agent and especially an independent agent listening to this, I'm sure a bunch of these problem areas resonate with you. And the core problem is that insurance pricing is just going crazy these days. And I could monologue for a long time about what's driving it, but the customer doesn't really care. The homeowner doesn't really care why their insurance price is going up. They just want it to stop, and they just want kind of long-term predictability to come back to their lives.
Yeah, 100%. And I think for the most part, if you live in an area like California or like Texas, coastal area,
Yep.
Louisiana, Florida, I think those customers and those people and prospects and whatnot, they're okay and not okay with it, but they're kind of used to it. They understand it a little bit. But when you start seeing, these rates and the amount of challenges that we have right now in property rates across the country, I think it becomes a different conversation altogether.
100% agree. I mean, some of those states that you named are really challenged. I think the media really give California a ton of attention. California is a unique beast due to the wildfire exposure, but it's not just a California problem. The price of insurance going up, which I and our company kind of categorize as like insurance unaffordability or insurance volatility. I mean, that is a problem that has hit pretty much everyone in the U.S. Inflation is 3% today, which is great for homeowners. But insurance inflation today is 13% across the country. And so, while 13% may not sound crazy, we're talking 4 times higher insurance price growth than broader price growth. And so, yeah, the problem is real, and that's resulting in serious complaints and kind of acute pains from homeowners. We have some customers who in Texas, for example, were paying $600 for home insurance pre-COVID, and now they're paying several $1,000s to insure that same property. While that's kind of an extreme case, we can find customers that look like that and have that exact same experience across probably every state in the US. And
100%.
so something weird's going on.
Well, and the thing is, you know, when I came up in the industry 20 something years ago, it was, a soft market, so to speak. And so you knew you were going to get shopped every year because they were going to switch for $1, $2, as the saying goes. And then we get into a harder market or, a hardening market. And now you're shopping, to keep them from taking these increases. But yeah, like a customer might come to you and you might get them for, $2,000 or whatever for an annual policy. And then you've got to hold your breath for next year. It's going to be going up, and as insurance agents that, listen to this, they know they're going to have this challenge. But again, for carriers now, they want to see longevity of the customers. They want to see them on the books for 3, 4, 5, 6, 7 years. And as a former carrier rep, I know as a carrier, they don't start making money until those renewal years. And so you've got this double-edged sword here of like the challenge of, the rates are going up, but you want to be a good loyal partner with your carrier. But there's some challenges going on there that I don't know that a soft market's going to change or a hard market. I don't think the market matters is where I'm kind of getting at. I said a whole lot there because I wanted to ask 3 questions all in one, but I didn't know where to go. So in general, what are you seeing? What are your thoughts on that as you're coming from that outside perspective looking in?
So yeah, you make a lot of great points there. The first one that I would say is that we agree that we at Eventual, we are the company behind Premium Lock, and so we look at data all day about the incentive structure between the carriers, their captive agents, their independent agents, and the homeowner. And in this extremely hard market that we've seen, which really started in 2021 and peaked in 2024, but remains pretty challenged through today in most geographies. That incentive and that alignment has really gone awry. And so what that means for insurance agents is a couple of things. Number one, independent agents specifically, have to work harder than ever to be able to maintain high retention rates. We've seen that on average, kind of retention rates were hovering in the somewhere kind of low 90% range. Now, for some agencies, it's in the 70s or 80s%. And so what that means is you as an independent agent have to grow your business 20%, 25% a year just to stay still with kind of your number of policies in force or your gross written premium, however you measure it. So that's extremely hard. Growing a top line 20% is a real accomplishment. And so that makes life really hard for agents. The second thing we've seen is that winning new business in this challenging market where homeowners are just mad about insurance and insurance unaffordability, winning new customers is extremely challenging because I think these homeowners feel that carriers and potentially their agents have kind of overpromised and underdelivered. They were brought in with kind of the concept of attractive, affordable pricing and stability, but the last few years have been anything but that. So we have observed at Eventual this kind of this sentiment among homeowners that insurance is too expensive and that it's not good value. And so that makes it really hard as an agent to get happy customers and to retain those customers and to grow your business. And so that sentiment that we observed is a big driver of why we built Premium Lock, and how we can help independent agencies kind of grow through this period of painful insurance pricing and renewals.
Yeah, I mean, you're right on there. I think hearing from someone on the outside looking in is really interesting to hear from some of that perspective too. And coming from someone who was managing on the other side of that as a customer of that and going through that, I think it had to been a headache for you guys on that end, not understanding what we know in the industry of. We're in a tough market right now, but again, the customer doesn't care. Like not saying you don't care, but you don't understand all that. You don't want to hear excuses of, oh, we're in a hard market and carriers are pulling out and we got this going on and that going on. And so for agents trying to explain that and trying to do a good job of educating, there's some out there that are really good at sitting down and telling that narrative and, telling that story of what's going on in the marketplace and why it's happening. But there's a lot that don't have that, skill and be able to do that. And so I think, with what you guys have got going on with Premium Lock, I think that's a good opportunity to be able to solve that challenge. And, as I've kind of dug in a little bit, preparing for this interview, I'm really interested, and I think the audience would be too, of just, you brought it up, with Premium Lock, and you brought up those kind of things. So, tell me real quick, like, what is, Premium Lock exactly? Like, give me, kind of the basics or the high level of what Premium Lock is, and what you guys have found so far, early stages of what Premium Lock is.
Yeah, thanks, Heath. So Premium Lock is a product that allows independent insurance agents all over the country to offer 3-year price guarantees on the cost of insuring homeowners. And so it works with any U.S. admitted lines insurance carrier on any admitted lines form. And it's really simple. It's a 3-year service that guarantees that your homeowner's insurance price won't exceed a specific level over the next 3 years of renewal. And so, that makes a ton of sense to homeowners because they are coming out of this period of real dramatic insurance price increases. And so the one thing that these homeowners desperately crave is better predictability about what is coming in the future. The reference I always like to make is to mortgages because, insurance and mortgages are
Yeah.
very, tightly knit pieces of running a home. The mortgage is always the biggest expense in owning and running a home, then property taxes, and then probably insurance. And so if you look way back in U.S. history, the change that the U.S. mortgage system went through of going from kind of uncertain mortgage prices all of a sudden converting to 30-year fixed rate stable insurance was probably one of the most important changes in the history of America to building wealth and building stability in the housing market. And today, if you look at insurance, now that insurance pricing is unstable and unpredictable, what homeowners are realizing that would be a nice to have and sometimes a need to have is stable long-term insurance pricing. I would love if I had a 30-year fixed rate insurance price for my home, but I don't. And for a variety of reasons, that will likely never exist in the US. But if you can have a tool that works alongside your existing 1-year insurance policy to get that price to be more predictable for, say, a couple of years or 3 years, like is available for Premium Lock, that takes you a long ways in the right direction of
Yeah.
getting stability, getting predictability in the cost of insuring your home. And so that's exactly how Premium Lock works. And it's distributed by independent insurance agents all over the country to homeowners.
Yeah, I remember, working in the agency. I remember a carrier that we worked with that they had, a 2-year program or a 3-year policy or whatever it might have been, and that was like the greatest thing ever as an agent to be able to, present, especially if I was in a competitive situation, and I was, especially in commercial lines when I'm competing and and I'm presenting my quote compared to somebody else's, I could say, okay, yeah, they might be a couple $100 cheaper today, but we know historically those rates are going to go up. You may have to do this. You're going to have to reshop that, or they're going to have to reshop all these kind of things where I've got a rate that's locked for 2 to 3 years, whatever it might have been. To me, especially even 2 years, I was able to say, hey, this is locked in right here. There's nothing you have to change. We're not going to have to set up a new ACH. You're not going to have to go through all the marketing and the, reshopping and all of that. And I could just remember that. Now, I'd love to hear from you on this. I think that as a PNC industry as a whole, what you got with premium lock, I do see, we could get to 5 years, fairly quickly, maybe even long term to get to 10 years. But I think you're right. In line with mortgage, like I'm on a 20-year mortgage. It'd be great to have that locked in for 20 years. Great. But, I don't think we're going to get there in my lifetime. But 5 years, I think we can get there, maybe 3 years in the foreseeable future. What are your thoughts on, first of all, going back, I guess about some of those carriers that had that already locked in. Is that kind of some of the idea that you came from that, or you found that out afterwards?
Yeah, so there's kind of a lot to agree with what you just said. So number one, the idea of multi-year stability is not new. Eventual takes inspiration from a lot of corners of U.S. finance and U.S. insurance, but also global finance and global insurance. So you look at Japan, for example, and Japan has been a great example of how longer term insurance can work. Their insurance policies have historically been longer dated than just a 1 year policy, and that's super helpful for the homeowners there. You mentioned some commercial carriers. There are a handful in the U.S. that have gained real market share from offering kind of longer term insurance policies. On the auto insurance side, you've seen one regional carrier offering this for personal lines auto. And so at Eventual, our secret sauce is kind of being this insurance outsider and looking in at the insurance market and seeing it being broken today and making life really hard for insurance agents and just saying, hey, let's just power through this timing problem and let's just get better long-term predictability while the homeowner customer can keep their favorite carrier, that spends their billions of dollars on marketing. That's really important to build trust with that homeowner, that in case, the home burns down and you need to get the home to be replaced or rebuilt, that carrier is the one, that is still insuring the home. But add on this thin layer of better predictability across multiple years. And that's like a nice symbiotic relationship between the carrier and Eventual and the insured. So I think, yeah, I totally agree with your observations of where the world should go. And then number two, on what amount of duration or time on premium lock is the right amount. Feedback from our customers and feedback from our distributors, our independent insurance agents, is that today 3 years is kind of this happy, perfect level where homeowners
100%.
really want it. Agents are comfortable offering that duration because when you get further out, you talk about 10 years or beyond. I have, predicting anything is hard. Predicting the future is even harder. And so going each incremental year out is really challenging. And so 3 years is kind of this happy level where everyone is excited about predictability, but it's still, you're not committing to a decade of some carrier or product. So we like where it is today, and our agents find that it supercharges their ability to win new leads, and it improves their retention on their existing customers. And so, yeah, we're happy to provide that service.
Yeah. Yeah, I think you're right. I think, first of all, I love that you guys as a newer company that you're tapped into your customers and that you are getting that feedback, because I think one of the challenges that I see, and as I've tapped into a lot of the tech industry and being a part of, some insurtechs and seeing the startups come and go, the ones that make it from the outside looking in are the ones that do get to know, dive into the community and get to know the industry and learn, instead of just saying, we're going to just put this round peg in a square hole and make it work. But for you guys to say, okay, we are from the outside coming in, we need to listen to our customers. We need to have some conversations. Did you guys intentionally put out some certain surveys and polls and, or how did you, not with that, I guess, how did you come into the intro? How did you finally get some of that feedback before you first got your first customer? What did you do intentionally on that?
Yeah, I mean the path to I think what we're talking about here is kind of product market fit. How much
Mhm.
do people want your product? And today, I sit here extremely confidently sharing that insurance agents, with no question, can
Yeah.
accelerate the growth of their business by adding premium lock, by differentiating, from other independent agents nearby by saying, hey, we offer a 3-year price guarantee with our existing Safeco, with our existing Travelers, with our existing, name your favorite admitted lines carrier product. And so that jumps off the page to the homeowner, and the homeowner picks up the phone and says, wow, I filled out this, my info in a lead gen platform, and I'm getting 100 calls to my cell phone right now. I will take the call from the agent who's offering a 3-year price guarantee because that makes a ton of sense. And so, yeah, the product market fit here is extremely clear. The way you get there is, I think it's pretty simple. It's be the customer, and think like the customer. And fortunately, I was the customer. I was
Yeah.
the real estate customer on the other end that was saying, man, I wish I didn't have all these insurance problems. I wish I had 30-year insurance. That makes a ton of sense. And then, the path to actually building that product, getting a product like this to market is a slow and pretty drawn out one. But once you get there, just constantly live and breathe the life of the customer. And so, our team today comprises a lot of insurance professionals. While I may
Yeah.
be or have been an insurance outsider, today we have our sales team comprises captive agents, independent agents who had grown and sold their businesses, and then later grown, insurtech businesses like ours. Partnership leaders who had started careers decades ago as BDRs in, California auto, and then had worked their way up through several acquired insurtechs and insurtech software platforms and new risk transfer platforms. So yeah, I think the secret is just surround yourself with both insiders and outsiders, and exclusively think like your customer, and build things that your customer will buy.
Yeah. Once you transition from being that outsider looking in to being in our space, and like I say our space, I've been in it 25 years. Once you kind of got in it, what was the biggest surprise or the biggest thing that was like, oh, what was that? Did you have a moment like that when you're like, oh, I didn't realize that? Or has there been several of those?
Yeah, I mean, I'm surprised, in both the positive and sometimes the other direction every day. And most of those are related to, how to describe your product to the world and how to meet your customer where they are. And so you can come in as an outsider and say, oh, we'll have all these really high tech, clean, cool ways of selling our product and getting it into our customers' hands. And often the solution is to meet your customer where they are and to be as straightforward as possible with the product. The language with which we describe premium lock now is really simple. It's, hey, we guarantee that your insurance won't get too expensive over the next 3 years. How is that possible? We predict where carriers are likely to set pricing. We sell those predictions, and if we're wrong, we guarantee the accuracy of that prediction. And so if we're wrong, we owe you, the overage. If your insurance gets too expensive, we reimburse you. And so learning how to communicate that product clearly and precisely was a surprise to me because, there are many ways to approach that communication and that marketing. But just doing a lot of reps with the customer can lead to some surprising learnings about what works and what doesn't work. I would also say, a positive surprise has been just spending time in the independent agent universe. A lot of our time is spent on the road at Big I conferences and other expos, just getting our brand out there. And getting every insurance agent that had, heard of us, but maybe hadn't yet got access to Premium Lock to spend time with us, learn about the product, and get up and running. And I've been really positively surprised at how fun those events are, and how much I look forward to being on the road with our customers and with our distributors. Because, it's a very tight-knit community. It's a huge community, and there are so many professionals out in this space, but it's a joy to spend time in the space and to get to know everybody that uses and loves our products.
Yeah, I love that. And I think you're right in so many areas there, and there's so many things I could agree with you on. And I love hearing again. putting yourselves in the shoes of the customer, and you keep repeating some of those things. And, talking about the predictive part of it, again, the first time I really heard of AI in our space was in predictive modeling and in some of that space, especially in property insurance. And with the evolution and so much more going on with AI in our space, more on the generative side. But back to that old school, as I say, AI. Are you guys using some of that predictive modeling in the AI, using AI in some of that, or is it just super smart insurance nerds that are really putting a pen to paper on? There's a kind of a combo of both.
Our core job, Heath, is predicting where insurance companies are going to set prices of a given type of insurance. So if you look at an HO3 with travelers, our job and my team's job is to say, hey, for this address in Arkansas with travelers on this form over the next 3 years, we expect insurance prices to grow. Is it 2% a year? Is it 10% a year? Is it 20% a year? It's probably somewhere in the middle. And so our job is to achieve that at scale for all 100 million units of housing in the US at every address and for every admitted lines carrier. That's a really big job. That's extremely challenging. There are a lot of people in the world that are trying to also predict a similar stat, whether you're an investor in the public companies that are behind some of these large admitted line stock insurers, whether you're an agent trying to be useful to your customer and saying, hey, I think that your renewal will be bad or not bad. We're all trying to do this behind the scenes. The way we achieve that, I would say, is different than most approaches. We certainly use AI models to predict where insurance pricing is going. But the model is not really the differentiator. I would say it's the inputs that you feed the model. And so, today we've really had an evolution over time of what sort of inputs matter and which ones don't. I would break insurance pricing into several important buckets. The first one is the geography. So where is the property located? Related to that is the perils, the major insurable perils that exist, whether it's wildfire, whether it's severe convective storm, whether it's hurricane, which of those are insurable under that form. So geography makes a huge difference. California near the Palisades, for example, as we've seen, has been an extremely high wildfire exposed geography. That can result in expectations of pricing increasing quickly. Hurricanes continue to be the number one driver of insured U.S. homeowners losses for all time. And so expectations of which geographies have hurricane exposure tend to be drivers of pricing. So, whether you call that climate change, whether you call that weather, weather dynamics are certainly changing and are certainly a driver of insured losses. So I'd say, yeah, kind of climate and weather are closely related to geography. The next one is the insurer itself, the carrier, unprofitable carriers that have been unable to raise insurance prices enough over the last few years. Those carriers, we expect and we see they continue to raise prices dramatically. Those CEOs and CFOs, their job is to run a profitable company. And so they will continue to file for dramatic rate increases when they need to and where they need to. And then the last one is kind of, a little bit more macroeconomic, a little bit broader. And so inflation, things that are related to inflation, like interest rates, like reinsurance costs, all those kind of broad expectations of inflation have a huge role in the price of insurance. And so what all that means is that over the last 5 years or so, inflation has been the number one driver of insurance price increases, kind of from like 2019 to call it 2023. It was just that the price of rebuilding a home and the sticks and the bricks and the labor that go into that have grown, very quickly and far faster than broader inflation. So we track inflation super closely. More recently, to be specific, 2024, now 2025 renewals.
Yeah.
Yeah. So that's
So
kind of the approach.
yeah, you brought up, the data and we've talked about weather, and that's obviously, a factor. But as you've done your research, you've got this data, and you brought up data a couple of times there, and I love that you brought that up. I'm a data guy myself, and a big, fantasy football stat nerd, and the whole nine, and I love that. But I'd love to know, What you guys have seen, if any, when it comes to things like construction material or cost of labor or things of that nature when it comes to this modeling and predictive modeling. Because yeah, the weather is one thing, but are you seeing some interesting things there when it comes to materials? And now there's companies that are trying to, I think they've got it in Louisiana now, maybe, but certain roofing material and certain material to build your home with that's more resistant to certain, level or high, speeds of wind and rain and all that kind of stuff. Are you seeing some cool stuff there, or interesting things there, I should say?
Yeah, yeah. So I'll break that question into kind of two parts. The first one is, how precise can you get with the construction cost inflation measurement,
Right on.
indices? And the second one is kind of like related to that, the hardening, and how much can you change your home to respond to some of these problems. So first, there are a lot of great large companies that power insurers and power their agencies on construction costs and how those things change over time. The ways they collect those data are super granular and super fascinating. So yes, you can dig really deep into the construction cost inflation indices to see, not just labor to build, a one-story single-family home in Texas, for example, but you can get into, labor of the professionals that build the foundation, labor of the professionals that are doing drywall. There are a lot of drivers of I would say wage inflation in the U.S. The number of skilled workers in a specific metropolitan statistical area, like the number of laborers, actually has a huge impact on the price of labor. Interestingly, like again, labor inflation has remained somewhat predictable over the last year. 23, 24 was when we saw a lot of volatility there, but today it remains pretty surprisingly durable. And so, yeah, there is a lot of granularity into which you can dive and predict. On the second part of your question about hardening the home, we are really excited about how hardening the home, which, for those listening, maybe not familiar with that, is this concept of, spending more money on the home to replace kind of weak elements of the roof or the foundation or the structure with stronger, more resilient materials that are less likely to burn, less likely to blow away, less likely to collapse. And as a result, have a home that is less likely to have a claim. The hope is that hardening the home can flow through and the carrier can credit the insured with that spend and with that investment and hopefully get a cheaper premium. We are really hopeful, and it's very clear that you totally can harden homes. I think there's still a lot of work to be done to get carriers
Yeah.
to be able to attribute value to hardening, and there are a bunch of great companies, in our space working on tracking those data and making carriers aware of it. So if anyone's listening here in that space, please continue to do that great work, and we hope
Yeah.
it accelerates.
Yeah, dude. Yeah, it's good to recognize that there are some people that are working through that. I was interested from your perspective on that and what percentage of your thought process is focused on the weather side of it versus the material versus the labor costs versus some of those other factors.
Yeah, yeah. The split varies a ton by geography.
Yeah, I would
Nationally,
imagine.
yeah, nationally, insurance seems pretty stable at the national level. Today we're seeing premiums are increasing 13% year over year in last month's renewal data. A lot of that is carrier financials and inflation. A lot of it is also just this regulatory lag where prices should be here, prices are here, and it's just the ability of carriers to make those rate filings and to get approved to raise those prices. A lot of that is just built-in timing lag, and so those are by far nationally the biggest drivers. When you get into more kind of climate-exposed geographies where extreme weather and unexpectedly extreme weather is increasingly frequent or severe or both. That's when you start to see, the weather piece actually show up in the models and actually start to be dynamic. And so certainly the U.S. Sun Belt geographies, so kind of the whole seaboards across the country, and then the West, where people are have moved in great numbers and love moving because the weather mostly. That's where you're seeing the biggest uptick in kind of surprise severe convective storm events, painful hurricanes, and then yeah, some of these really high severity fire events. And so yeah, it depends. The climate piece depends a ton on geography.
What do you see? Okay, premium lock, obviously, I love what you guys are doing. I'm a fan already. But how do you see that philosophically speaking, I guess you could say, affecting the industry as a whole when you start seeing people go from 1 year policies to more 2 and 3 year policies at a time, as far as long term effects on the industry, negative and positive?
Giving multi-year predictability, giving peace of mind is something that homeowners want because they're buying it. They buy the product and they are very excited and they tend to be our number one cheerleader. They tell their friends that, hey, I can now tell you what I think my renewal will be next year, 11 months or 12 months out. And so that stability is certainly positive for the homeowner. And relatedly, we think it's really positive for the insurance agent. There are a couple pieces that tend to get agents really excited about it. The first is making it easier to win new deals, to differentiate, to stand out. And so over the next few years, we see premium lock as a real differentiator and a real, split between the haves and the have-nots in the insurance agent universe. Those that have are seeing higher conversion rates, lower cost of acquiring customers, better retention, better narrative, and better marketing materials
Sure.
to say, hey, I have this 3 year price guarantee. My competition does not. And so we expect the whole industry to continue to adopt this pretty quickly, as we're already seeing today. On the carrier front, and then working our way up to their investors and their capital, reinsurance. We have seen that actually some carriers have brought us up and mentioned our product and actually suggested our product to some of their captive agents and some of their independent agents. And so almost what's happening is that these carriers acknowledge that the way that they're regulated and the way that some, insurance commissioners in some, challenged states are reacting is fundamentally breaking the industry and making it really hard for those carriers just to sell insurance. And so those guys are actually really excited about premium lock because it's this solution that can help bridge kind of this regulatory deep pain that states like California are feeling with what homeowners want and what an efficient, functional, liquid insurance marketplace should act like. And so, yeah, we've seen that the carriers have been supportive and
Yeah.
excited about getting in that direction. And then lastly, with reinsurance and insurance-linked securities, which is a lot of the capital that backs these carriers, we are behind the scenes building out kind of a new asset class in risk transfer and in insurance. And so building an insurance-linked securities market based not on the payouts of insurance as it's built today, with a lot of capital out there globally, but rather one that's triggered by the price of insurance that carriers are setting and that regulators will allow. That is where we see the world going, and that's where I think we're in the early innings of building. And so that's extremely compelling and exciting. And I think any capital that's out there in reinsurance and in insurance-linked securities should be really excited about what's coming.
Yeah, and I guess I shouldn't have said negative because I don't think it's going to have a negative impact. I guess what I meant by that might have been is because I agree with you on all the positive things you just mentioned, and I love to hear that you're getting that engagement and that positive feedback. But I guess has there been any one thing, like a myth, or not a myth, but like anything you've been able to spell, like a challenge or like someone that maybe pushed back a little bit, and you're able to say, "Wait a minute, no, let me explain a little bit further," and then that light bulb moment happens for them. Has there been one of those moments?
Totally. Yeah, we're constantly learning from our customers and our agency partners about what makes sense for the customer and what doesn't make sense. With any product like Premium Lock, we work closely alongside the existing home insurance policy, and then so there are certain conditions for which Premium Lock is a good fit and Premium Lock isn't a good fit. So one of the learnings has been our decision of do we allow Premium Lock for excess and surplus lines, or admitted lines, or with kind of the state insurer of last resort, kind of who should we be allowed to work with, and what sorts of policies will we accept that are acceptably predictable for us to kind of sell this product. And so we learned, for example, that E&S and the state insurers of last resort, those are really hard types of insurance to predict where
Hmm.
pricing will go. The forms are not always apples to apples comparable. The state insurers tend to have, some pretty direct, are pretty directly driven by how elected officials can view the role of insurance. And so, yeah, that one definitely drove our decision to go just admitted lines, which is, in the high 90% of US homeowners are admitted lines in the US today. And so that was one learning. Hey, E&S is really hard. E&S is really
Yep.
complicated. Let's not sell premium lock on E&S just because our
Yeah.
ability to predict that is lower. Fortunately, I think what's happening is that, again, we call out California because it is, you talk to any agent there and their number one concern, it's not the price of insurance, it's just the unavailability of insurance because the state insurance commissioner is keeping prices here and prices should be much higher than that. And so they've started to deregulate pricing and they've started to allow carriers to increase prices to sell more insurance, but it's taken a really long time and it's ended up actually hurting the consumer a lot more than those officials may have intended. And so I think it's really important for us to keep an eye on making sure our insurance markets are regulated well and regulated thoughtfully and avoiding some of these second order effects that can actually really, blow up a real estate market when you can't get a loan because you can't get insurance. And so the price of housing can actually change a lot really quickly. So we learn a lot and there are some scary second order effects that you can observe if things go wrong.
Well, yeah, you brought up something real quick that I want to touch on for a minute because it got me thinking of because even in Arkansas, where I'm at, in we're not, we're landlocked. We're not, coastal area like California. You brought up carriers pulling out of the state. We've had several carriers in Arkansas domiciled that pulled out of the state, or put on moratoriums and whatnot. What happens to premium lock in those situations when you've got a premium lock in place on a carrier that all of a sudden pulls out of the state? Obviously, there's going to be a challenge there, in my opinion.
We've structured premium lock in that circumstance to be really customer favorable and customer friendly.
Okay.
And so what that means is premium lock is carrier agnostic. And so as long as you start your life with premium lock on a certain admitted lines carrier and you end your 3-year term on premium lock with an admitted lines carrier, the product stays in force. It's super
Ah,
flexible. And so if you get non-renewed, or you decide to change carriers for some reason, as long as you're admitted and on a similar form, you're good to go. Of course, in that, in extreme cases, Arkansas actually, yeah, E&S is somewhat of a large market share there. So yeah, if you start admitted and you end up E&S, premium lock turns off because it's just a totally different type of insurance.
yeah,
Again, some of the ways we've structured around that is, we make premium lock pay as you go. It's monthly. And so it's not like a customer will have paid 3 years of fee all up front and then only gotten a year and a half. And
yeah,
so it's monthly, and so that's friendly for them.
yeah. That makes sense. Yeah, you guys have probably been hit with some of those type challenges and questions and things like that as you're talking through this, and so again, my curiosity just popped in on that one. So, we've talked about a lot of things here, and there's so many more things I want to get into. But just high level, just to start wrapping up a little bit. First of all, let me ask you. You've already hit on this a lot, but I couldn't get out of this without asking just directly to you. How can Premium Lock and Eventual help independent agents grow their businesses? Like at that fundamental level, hit me with that real quick.
So premium lock helps independent agents because it makes it easier to grow the business.
Sure.
Um, what we like to do is we like to every time we get a new agent or agency up and running with us, we like to boil the job of the agency owner down to one equation, which is, hey, there are 5 or 6 levers that I can pull as an independent agent owner to make my business not just a couple mil of premium, which already is a great business, but how do I turn this into a $10 million gross written premium business? How do I turn this into a generational company? And so the couple of levers that you can pull are, hey, I can go get more leads, however you get those leads. I can close a greater share of those leads and win more of those leads. I can increase the size of my average customer, so how much premium that customer is paying me. I can improve my retention, so make sure that I'm not just churning.
Yeah.
Or I can increase my commission. Um, And that's pretty much it. Those are kind of the five levers that you can pull. And so what's awesome about Premium Lock is that number one, it improves your conversion rate. And so for a given amount of leads that you're buying or that are coming to you through referrals, um, homeowners fundamentally want businesses and agencies that offer long-term price predictability. And so by marketing a 3-year price guarantee, you can increase that lever. You can increase your quote to bind rate. And so we love that, and agents love that. We generally see that agents, for every premium lock that they quote to their customers, they're at about a 50% quote to close rate, which is extremely high, much
Sure it
higher
is.
than any other product that we've seen agents sell. Again, because it feels like a natural kind of supplementary service that should probably have come with their insurance policy in the first place. So that's lever number one. Lever number two is the retention rate. It's not always fun to think about retention because it takes a while to measure and it's something that happens in the future. You're not just getting
Yeah.
commission on it today, but it's still really important. Again, a business that loses 15% of its customers every year has to grow 15% a year just to stay in place. And so improving retention, you're effectively converting a 1-year homeowner customer into a multi-year insurance, homeowner insurance customer. And so that naturally improves retention and gets that homeowner to really like the service that you provide and want to stick with you for being kind of that innovative, forward-thinking agent. And
Well,
then the last piece
and
is,
on that, before you get in that
yeah,
last one, on that retention piece, you're hitting both sides of that. And the retention, there's a faction of agencies that base their retention, which is scary right now, on premium volume alone. And then there's the
yeah,
ones that base their retention numbers on policies in force. And so
yeah,
you're able to touch both of those sides with what your product does. You're able to keep them on the books longer. And so that helps with your policies in force. But then also you're able to help with, maintaining that revenue and the premium that's coming in because you've got that locked in.
yeah, exactly.
I love that.
Yeah,
So I
it's
don't mean to
always
interrupt you,
interesting.
but I love that.
Yeah, it's always interesting to hear which retention number
Yeah.
agents use when they talk to us because they're very different. PIF policies in force tends to be in this market much weaker than gross written premium that has been your retention number because naturally premiums are growing a bunch, and so some of these agencies are saying, hey, we're growing 30% a year. It's like, oh, that's awesome. It's because your premium growth was 20% last year and your PIF was 10%. And so those are awesome numbers and really good for the business. But this is a way to hit both sides of that, like you mentioned, Heath. So
Yeah, you're
yeah,
exactly
we
right. And
encourage
that's
that.
where I think it's scary when people start looking at that because eventually these rates are going to level out or change. And then if you don't have the policies in force because you've lost 30%. So I love that you're hitting both sides of that. You're going to pull the third lever. Sorry, I didn't mean to interrupt you.
Yeah, no, the last one is we pay our agents for distributing and for selling premium lock. And so while we're not going to double the revenue that you collect per dollar of premium, it can still be a meaningful way to you know essentially monetize your CSRs who are really right now just handling the renewal, so you can attach this at renewal. And then also just further monetizing the producers and the agents that are out there winning new customers and cross-selling and adding premium lock.
Yeah, that's awesome. So for those that are listening, and again, thank you for letting me just put on my curiosity hat for a minute too, because
Of course.
I love this. But you know, now channeling the audience listening, how could someone get involved and get access to Premium Lock? What does that look like for their homeowner clients?
Yeah, so we distribute premium lock through independent agents all over the US. They come to us and get access to premium lock as you would for any other product that you may already be selling to your homeowners. We have a variety of tools. We can integrate with your agency management platform, your CRM. You can quote on our web-based quoting portal. Really easy to start. It takes 5 minutes to learn the platform. Or if you're a larger distributor of insurance, we can go all the way up to the API integration and bulk quoting and all of that. Low lift, pretty easy to scale quoting volume. And so, yeah, next steps are to book some time with one of our territory sales managers. You can go to eventualclimate.com or premiumlock.com, and there'll be a big button that says get appointed. and get access to Premium Lock.
Yeah. So for those that don't know, you've heard the two terms interchange. Like Premium Lock is the product, Eventual is the company. So
Yep, that's
I love that
exactly
you
right.
spelled that out a little bit. You can go to premiumlock.com or go to eventual.com, right?
Yeah, eventualclimate.com.
Oh, eventualclimate.com. Perfect. So yeah, make sure you do that. If they want to connect with you specifically, would they go to LinkedIn? Is that the best place to find you?
Yeah, you can find me on LinkedIn. I try to keep everyone that's connected to our company to be updated with what's going on with the business. Share some insights on all the data that we have about insurance renewals and whether it's rate, whether it's inflation, whether what's going on with a specific regulator. So yeah, you can connect with me on LinkedIn just at Dylan Dimarchi.
Yeah, and I'd be remiss if I didn't bring up. I saw recently on LinkedIn that you're going to be speaking at Indie Tech Conference in January in Florida. So tell me real quickly. You don't have to give the whole thing away, but if you just want to give me a minute or two, Jason and Mitch are good friends of mine, and I love what they're doing. That I've never missed an Indie Tech, and I'll be there. But kind of what are you going to be talking about there, if you don't mind, and maybe
Yeah,
we
of
can sell a
course.
few more tickets.
Yeah, no, we're really excited about Indie Tech. We're excited to have some of our superstar agencies showing up and sharing more about what they love, about Premium Lock and being able to sell this product to their customers. I like to be a spokesman for the company, but I think our existing customers and distributors do an even better job. So yeah, we're excited to share some more detail about stats and case studies about how Premium Lock has accelerated other independent agencies all over the US, and how to get, Premium Lock integrated into your day to day and getting your team up and running and increasing, lead conversion rates, increasing retention and increasing commissions. So we're really excited to be seeing everybody down there early next year.
Yeah, for sure. And I think the mastermind might be sold out, but the Indie Tech itself is not. So make sure you go check that out. And you can go hear Dylan speak and get some recipes for some good food while you're there. But yeah, I love what you guys are doing. I've been a fan ever since I first heard of it. And you and I have a mutual friend that works with you there that, and Caleb's a former guest of the show. And so when he started talking to me about what you guys are doing, I was immediately blown away. And so I'm so glad that you and I have connected and I've, been able to have you on the show. And so guys, make sure you go check out the website. Make sure you go check them out on LinkedIn, do all the things, get involved, get a demo, do the things. Dude, thank you so much for hanging out with me today. Thank you for, enlightening us on what you're doing and it's kind of talking through and letting us kind of get to know you a little bit more. Because again, someone from the outside looking in, it's important that we understand business gets in the right spot and look to protect the customers and to help independent agents grow.
Keith, thanks for the time and for having me on. This was a ton of fun.